Christian D. Guzman, Senior Vice President, Moody's Ratings, is now joining me from Singapore. Appreciate your joining us. Your first reactions to India's budget. Do you believe this is done enough to counter some of the global headwinds and uncertainties that we've seen in the last 12 months?
Well, thanks for having me and allowing me to speak to you about the budget today. I think to answer your question is that this doesn't really provide. My first impression is that this doesn't really provide a significant offset to the external headwinds that we have today. But I think at the same time, what you have here is a demonstration of fiscal consolidation, given the target for a narrower fiscal deficit. So within that sort of overall sort of policy target, the government has tried to do what it can in terms of support to the economy, knowing that there is limited fiscal space.
But what would you have liked to see that you believe should, where would you have liked to see the government do more to counter these global headwinds and do a more breakthrough budget? Because the government says, look, we're trying to ease US tariff distress, give export benefits and increase manufacturing competitiveness in certain sectors. Do you believe the government should have gone through this sector-wise approach, or should there have been some bigger reforms undertaken to offset the kind of distress that certain sectors are facing?
Well, I think we have to sort of look at the bigger picture, and the bigger picture here is one of overall resilience. I think all of us in the market were quite concerned about the very punitive headline tariffs that the U.S. had imposed in the middle of last year, not just the 25%, but the additional 25% just given the purchase of Russian oil. But I think a couple of quarters on, you have seen that demonstration of economic resilience. So I think it was appropriate, given the limited amount of fiscal space that this government has, that they have, in essence, undertaken a tactical approach, a more sector-specific approach to help address those parts of the economy that may indeed be more affected.
Right, but the sector approach also comes on the back of the multiple free trade agreements that the government has signed in the last few months. Do you believe, therefore, that eventually the signals you're looking at are not just in the budget, but actually outside the budget, where some of the heavy lifting, some of the reforms, particularly in terms of ease of doing business, labor codes, all of that comes from outside the actual budget speech? Is that what you're looking at more closely now?
Well, I think that is correct. A lot of that heavy lifting in terms of helping to actually just facilitate more significant pickup in growth is going to have to be done outside of the budget. Once again, this government has been very adamant about portraying to the market that they are fiscally responsible and therefore anchoring their fiscal policy going forward on a downward trajectory in debt to GDP. What that means is that their ability to really push through significant fiscal stimulus is not there unless they do want to basically reverse that commitment that I mentioned.
I want to ask you one final question. We've seen currency volatility in recent times, FDI inflows slowing down. Do you see all that changing? Has this budget given signals to Moody's, for example, that FDI inflows will increase into India?
Well, I think from our assessment, when we look at this budget, it doesn't really change the broader parameters of how we view the sovereign credit profile. Once again, the pace of fiscal consolidation has slowed quite a bit, so we're still looking at relatively wide deficits, at least wider than what we had seen prior to the pandemic. Yes, there has been some progress since the pandemic, but we've in essence, not sort of fully recovered yet. Debt remains quite elevated, and we do have a narrowing of the tax revenue base. This isn't just a function of this budget. It does reflect some of the measures that were taken previously, such as those in the last budget, where you've exempted a large amount of taxpayers from paying tax, as well as the GST rationalization. So you do have a smaller envelope of revenue for which to really sort of facilitate growth. So with the deficit still wide, with the debt still elevated, I don't really think that we see here that there are strong signals in the market from the budget. However, we do think that, as you perhaps had implied earlier, some of the other things that we have seen, such as maybe stepping away from the traditionally more protectionist trade policy by signing more FTAs, really trying to consolidate trade relationships with partners other than the United States. Plus, I think what comes with that, perhaps potential improvements in ease of doing business and in easing the regulatory burden, not just for foreign investors, but also domestic investors. Those are the things that are going to move the needle.
Christian D. Guzman giving us a sense there from Singapore at this time of the night. Thank you so much for joining me here on this budget special.